Hello traders, welcome back to this channel again. I still remain my humble self, Wise Forex. Today we'll be discussing what we called or what I called area of liquidity, premium and discount. So in our last recap, where we talk on what I call the liquidity, we says in the sell side scenario we want to see a sweep of the previous high, a break of structure, structural liquidity, then another break of structure. We want the market to sweep this previous high again, tap into our POI and sell off. So we want another pattern like this way, a sweep of the previous high, then maybe a structural liquidity, then break of structure. Now we want the market to sweep this previous high again, tap into our POI and then sell off. So these are the two major patterns that we actually discussed that day. So and the third one, if you have not been with us and you are here for the first time, the third one is we says we want to see a sweep of the previous high, then we want to see a structural liquidities before this break of structure. Okay, let me just use it this way. Let me delete this one, but hope you have take note of this. So we says we want to see uh a sweep of this previous we want to see a sweep of this previous high. Then we want to see liquidities around this region, liquidities maybe forming highs and lows before this particular break of structure, like 2 or 3 or 4 or 5. Then we want the market to sweep all these liquidities, then tap into our POI and sell off. That is our third um uh chart pattern that we want to see. So and today we'll be talking on this, what I call the area of liquidity, where to buy from and where to sell from. So now we says that we want to see a sweep. We want to see a sweep. Then we want to see a break. Then we want to see this liquidity here being taken out. Then those come this our POI here and then sell off. This is what we want to see. But this scenario now, how do we know if this structural liquidity, this particular leg here, this leg that you are seeing, how do we know if it is valid or not? How do we know if it is valid or invalid? That is what we call premium and discount. That is where premium and discount comes from. So in this sell side scenario, we want to sell from the premium. Yes, we want to sell from premium, then we want to buy from discount. True or false? Hope you understand me. Now, how to know if this particular leg is valid is we take our Fibonacci from swing low, from the recent low here now to the recent high. So we want to see this leg above 50%, because anything above 50% at the premium is valid. But if it is on top the 50%, it's still valid. But if it is below the 50%, is invalid. So which means if we have a leg like this, if we have a leg like this, if we have a sweep of the previous high, then a break of structure, then we had a liquidity maybe around this region, another break of structure. Then we want the market to sweep this particular liquidity, tap into this POI and then sell. So if we had a leg like this that is maybe around this region, so if you spray your Fibonacci from swing low, from this recent low now to the recent high, you can see that this particular leg is below the 50%. Is below the 50%, which means if market is to come around this region, the market might at least, or maybe take out this recent high again, take it out, then maybe breaks another structure, breaks on that structure, then came into our POI here now and sell off, and sell off, and sell off, then sell off. I don't know if you understand where I'm going and what I'm trying to explain here. The same thing happened in the sell side, in the buy side scenario. Let's use buy as an example now. Let's use buy as an example. Imagine we had a sweep of this previous low here, then a break of structure. So we want this leg to pull back into the distant region, then another break of structure. Then we want the market to sweep it and tap into our POI and sell off and buy off. I mean to say, tap into our POI and buy off. Tap into our POI and buy off. That is in this scenario now. So how do we know if this liquidity is valid? Is by taking your Fibonacci, you spray it from swing high to swing low. From swing high to swing low. So as long as this leg is below the 50%, is below this 50%, the leg is valid. This liquidity here is valid. This particular one you are seeing here is valid. But if it is on top of it, it's still valid. But if it's above it, it's not valid. So wait for market to create liquidities, then we can now sell off. We can now buy off, I mean to say. So that is how we discover it. Now let's go to a real market chart to see if what we say is correct. Is correct. Let me use the daily so that we can see this. Alright, this is the daily chart of GBP NZD. If you were with us from our last class, we know that you can see that we actually analyze this pair. We use it as a recap and we analyze the pair. We says we want to sell off from this region. By around that time, market was roaming around somewhere here like this. Now today, the market is on this region and is reacting from our point of interest. So what did we say? We can see that this market is definitely bullish. Yeah, the market is bullish. This is a bullish market. So now what happened there is that we saw a sweep of this previous low here. As you see that we map it out. Then we saw structural liquidity. Then we now saw a break of structure. We now saw the break of this structure here. So what happened again? We saw another break of structure. Then we want the market to sweep this liquidity, this particular liquidity here, and now come into our POI, point of interest, and buy off. This is what we see here. This is what we see here. And this is exactly what we actually explained there. Let me map it out again. In the buy side scenario, it says we want to see a sweep of the previous low, a break of structure. Now, in this scenario, we had a structural liquidity, then break of structure. And that structural liquidity, break of structure. So we want the market to sweep all these liquidities, come down to a point of interest, and now buy off. And now buy off. And now buy off. Sweep. This is sweep of the previous low. This is break of structure. This is structural liquidity that we want the market to take out. Then this is another break of structure. So we want this leg to take out this liquidity, come down to a point of interest, and now buy off. And now buy off. This is exactly what we are expecting, and this is what is happening here now. This is what we actually saw here, the pattern we saw. Now, but however, what we want to discuss is how do we know if this particular leg, this liquidity that we map out is valid? Is by taking your Fibonacci. You spray it from swing high to swing low. From the most recent high to the most recent low. What happened? We can see that this leg is below this 50%. This leg is below this 50%. If this leg is above the 50%, like as this one is this one is not valid. But what happens to this one? This one is now below the 50%, which makes this structural liquidity valid. So that is how to discover how where to trade from. So now, as this one is valid now, if the market comes down to this region, so if the market comes down to this region below this 50%, below this 50% now, then we will now start looking for where to buy from, where to buy from, where to buy from. Definitely, I want to buy from this, my point of interest here. You can see now. So, so that is where to how to know if how to know where to buy from and where to sell from. You sell from premium, then buy from discount. Sell from premium, then buy from discount. And we can now see where what validate our structural liquidity. So now we can see this particular one now, this analysis we made them. So we say since the market is okay, since the market is still in the premium region, because we spread our Fibonacci from swing high to swing low, and anything above this 50% is premium. Yeah, we can see it. And anything below the 50% is now discount. So how do we do? What should we do? We look for opportunity to sell from this premium till it enters discount. Look for opportunity to sell from the premium till it enters discount. That is why we saw this opportunity here. How do we saw this opportunity and what did we see? The same pattern. Let's scale to the lower time frame. You can see the chart on the lower time frame. This is 4 hours time frame. What did we see from the premium? We saw a sweep of this previous high here. We saw a sweep of the previous high. Then we saw a break of structure. Okay, before the break of structure, let's take the wrist off now. Before this break of structure, we saw a sweep of the previous high here. Then we saw structural liquidity inside of this place. Then we now saw break of structure. So what do we expect? We want the market to sweep this liquidity here, then tap into our point of interest and now sell off. And sell till we touch the 50%. We touch the 50% from the higher time frame. From the higher time frame, remember we says let's go to the higher time frame and see if and spray our Fibonacci and see where the premium ended. All right, this is higher time frame. So what should we do? We spread our Fibonacci so that we will know where to sell till where our sell limit will be. We spray from swing high to swing low. Let's use a bar. Yeah, let's use this bar as a mark to it. Then we can now still scale to the lower time frame again. So have you seen now? This is our 50% fib where it reaches. So which means as we are selling, we are very conscious because the overall trend of this market is bullish. The overall trend of the market is bullish. So we are looking for an opportunity to sell till we enter the discount. As soon as we enter the discount region, we close all our sell orders. So that is why we saw this opportunity from this premium. We saw the opportunity from this premium, which means we saw sweep of the previous high. We saw break of structure here. Then we saw structural liquidity that market has swept already. Then market came into a point of interest and we are now selling. If you doubt me, go and check our previous video. Market was around this region when we says we just need the market to tap into this, to come to this particular region because the market have to sweep this particular leg here, this liquidity. So now if you still check, why did we says what validate this liquidity? That is why we are even here. This particular liquidity here, what validate it? This liquidity that we use as our reason of selling. What validates this particular liquidity here, this liquidity way that we use here, is we spread our Fibonacci from swing low to swing high. We can see that this leg, this Fibonacci here, this leg is above the 50% fib, which makes this leg valid. Which makes this leg valid. You can see. So some people will be trying to sell off from here, but not knowing that the market has to take out this liquidity, this particular structural liquidity here. You can see now the market took out this liquidity, then went to the more of the premium, and we are now selling. So for those of you who still want to get in, you can still look for opportunity to sell off from here. This is my sell order, and we'll be currently anticipating 400 pips plus. So that is how to discover area of liquidity from this discount and premium, and where to sell off from. All right, our next video will be more of brutal and will be more of educational. So stay tuned as we continue. Thank you and God bless you.